Welcome to Market Movers. I'm Dave Hightower, joined by Dan Bossy. Dan, extreme volatility is the watchword for each and every day. We have a March 1st stocks report on the horizon, but we've got a lot of big picture fundamentals hitting the market to start this crop year, don't we?
We really do, David. I don't think anybody came into the year expecting the two black swans of a virus and also, of course, a oil war between Russia and Saudi Arabia. Both have kind of combined here and really caused some uncertainty in the markets. Everybody's looking for direction, and it's unprecedented times. And so, absolutely, this is a different world than what we started with in January.
So we have a lot of cheap currencies in South America that are making our grains unattractive. We have seen a little bit of purchasing out of China. China has very low soybean stocks at their ports, but from a financial perspective, just doesn't make sense. And we seem to have a lot of rhetoric going between the two leaders that would not seem to be conducive to trade.
Well, phase one started off. They bought some corn and they bought some wheat, David. Those trades were welcomed. We hope there's more to come. Do we think the Chinese will probably reach their $36.5 billion at the end of this year? Well, USTR will take a look at that in July or August and make some determination. But I would imagine we need to see some trade picking up here relatively quickly for the new crop position. Brazil was selling China soybeans for August delivery or August shipment, I should say, on Friday and today. It's something that wasn't expected. So our window for opportunity is closing, but we do still see the Chinese being as prominent for our new crop marketplace.
And a lot of this, we saw some extreme upward sensitivity in meal prices in China overnight. So that seems like we're starting the volatility we normally get in the spring.
Well, the Chinese, because of their virus situation and now the restarting of their economy, got very short on terms of meal. And then recently, they installed a 14-day quarantine at port to make sure that coronavirus was not coming back on shore. So those two combined have really caught the Chinese flat-footed with soybean supplies. There is over 11 million metric tons of soybeans on the water heading to China. That should help them. But it does leave some uncertainty for the meal buyer in China here today in terms of when will those reach the crush plants that mostly are operating, but a few still being down?
So let's look at the report. As typical, the planted area is looking to uptick a little bit as we go into the season. You know, you always see the trade come out and say such low prices will result in less plantings, and that tends not to be the case. They find a way to plant it. So, what do you see? Higher in both corn and soybean plantings?
Well, Mother Nature isn't looking kindly on U.S. farmers heading into the end of March, but there's hope anyway in April on the long term forecast that there will be better planting conditions and warmer temperatures ahead. So, taking weather is something we'll be watching carefully after this report. But I think today it's really the macro environment along what stocks and seedings will show us in this number that'll direct prices as we head into that planting season.
And unfortunately for producers, they'll need to see some of that crop cut back if they're going to get any relief in prices. So thanks, Dan, for your insight. We'll keep a close eye on the market. Thanks for joining us on Market Movers. I'm Dave Hightower. Trade well and trade smart.